Nice. Okay, guys, let me just quickly just record this for people who are not in the session. I think it's recorded. So we can't wait for other people because time is ticking. Code invalid. Okay, let us start. Okay, guys. Is everyone? Because I'm not quite sure who joined and who didn't join. Because I think there were two new people I got today, so I wouldn't know if they in this session or not. Is everyone new here? Is everyone old here? Not age old, but session old. Is everyone in here a new member here? Okay, I don't even know what I'm saying. Okay, you're new. Okay, I remember you. We have a new member. Okay, so I'm assuming only one new member joined. Everyone is familiar with everything. So I want to know. This is a question specifically to Cat. 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 Do you have a forex background? Do you know anything about forex? Have you done anything in forex? Do you basically know forex? Just to see if you have some background information. Because if you do have background information, I won't waste time going through all the unnecessary stuff. Are you a newbie, like totally new? You don't know anything, clueless? Cat, can you hear me? This is a question directed to you. Okay, cool. He knows the basics, so I'll just go into the strategy. Okay, guys. I started. Okay, we have a new participant in. I started an account specifically for this session, so I'll trade this account only when we're in the session. And let's see where will this account be. I'll only take trades when I'm in the session, okay? And then we'll see how the account will go. Cool. Let me just take all these things out. Okay. Guys, this strategy is based on two things. It's based on indicators and it's based on swings. It is based on indicators and swings. Based on indicators and swings. Swing high and swing lows. It's that simple. If you know what to swing high and if you know what to swing low, and if you know what's a higher high and a higher low, and if you know what's a lower low and a lower high, and if you can identify previous highs or previous lows, you can kill the strategy. Okay, so this is how it goes, guys. I'll just throw out all the highs, okay? see what I just highlighted here is our swing highs and swing lows. These are not the only swing highs and swing lows we have in this specific area here. Let me just get my tools. Like this one. Yeah. These are not the only, let me write this down. These are not the only highs and lows. Okay? These are not the only highs and lows in this specific area here. There's a lot. This is also swing low. This is a swing low. It's a swing high. It's a swing high. Swing low. Mini swing high. Mini swing low. Whatever. And then these are not the only ones, but I just want to highlight the main ones so you can see. It could be easy to reference. Okay. So let me just basically use horizontal lines instead here. Let me use horizontal lines instead. Because I think I already see a trade forming. So I'll just use horizontal lines. I'll explain what I'm doing. I'll explain it later. Okay. Okay. So the strategy is based on swings and on moving averages, which is our indicators we use. Okay. So what happens is this thing is gonna annoy me. The hell is happening? Okay, I don't know what's wrong with the software. Okay, cool. So what we need to take note of is our swing highs and our swing lows. Okay, when we need to take a trade. So for instance, let me just go into the strategy, but then I'll come back and explain what I'm talking about. So for instance, if we had to look for a buy opportunity, we are looking for the market to break our swing highs and our swing lows. Is everyone with me? We are looking for the market to break our swing highs and our swing lows. Okay, I won't use these tools anymore because they keep sticking to the screen, and that's not what they're supposed to do. So you're looking for the market to break the swing high or the swing low. I'll explain in depth later. So before I even start, can everyone set these moving averages on their charts? I hope everyone has their platform on and set these things up. We basically use moving averages only. We don't use any other indicator. But if you type of person that likes to play around with your platform, you could try other indicators and see if you can modify it into your own. And someone I've taught has done that. Okay, but I'm teaching you what I know. Okay. Guys, Nico is saying, I'm getting WhatsApp messages. Nico is saying that he doesn't hear me well. Does everyone hear me clear? Because I just got a message from Nico saying that he can't hear me. Does everyone hear me? Okay, that means it's Nico's computer that has a problem. Nico, if you can hear me now, can you please turn off, try disconnecting and connecting again? It might work, I'm not sure. But it proves that it's your PC. So try figuring that out. Okay. So we're using moving averages. The first moving average you need to set is the 1414 EMA, exponential moving average. That's the first moving average you look for. It's the 1414 EMA. You can customize it to any color you want, but for now, just make it red. Okay, guys, when you hear me pause, I'm just reading messages here on my WhatsApp group. Okay, so for now you can make it red, and the thickness is up to you. So it's the 1414 EMA, red, thick. The second indicator that we use is also the moving average, but we use the second moving average we use is the 30 SMA. Someone has their sound on. Let me just quickly check who. JT, can you please switch off your sound? Okay, it's muted. Okay, the second indicator we use is the 30 SMA, and we use the color yellow. Simple and straightforward. Okay, cool. Now, before I even continue, this is what you look for. When the EMA, which is the red line, 14 EMA, when the EMA is above the SMA, which is the yellow line, we're only looking for buy opportunities. I repeat, when the EMA is above the SMA, when the red line is above the yellow line, we're only looking for buy opportunities. When the red line is below the yellow line, when the EMA, 14 EMA is below the 30 SMA, which is the yellow line, we're only looking for sell opportunities. So let's say now the EMA is below the SMA, right? We're only looking for sales. That is why the market is dropping like this. We're only looking for sales, right? The only way we can start looking for buys in this case is if the red EMA crosses over and goes above the SMA. We are now looking for buy opportunities. So this brings me to my 4 steps. By the way, guys, you only need to know 4 steps. This strategy is based on 4 steps. The first step is what we call a crossover. See, when the EMA is below the SMA and we're looking for sales, for us to start looking for buys, we have to see the EMA crossing over to the top, from below to the top. That's easy to digest, I'm assuming. When the EMA is below the SMA, we're only looking for sell opportunities. The only time we can start looking for buy opportunities is when it crosses over above the SMA. Okay, this message is coming here. Can I just quickly read this? Okay, as I was saying, when the EMA is below the SMA, we're only looking for sell opportunities. The only time we can start looking for buy opportunities is when the EMA crosses over above the SMA. That is when we start looking for buy opportunities. So when the EMA is above, for instance, when it's above, okay, no message. So when it's above the SMA, which means we're only looking for buy opportunities. The only way we can start looking for sell opportunities is when the EMA crosses over below the SMA. Then we can start looking for sells. I hope everyone understands that. So what is our second step? Our second step, what are we looking for next? After the crossover has happened, right? What are we looking for? I hope everyone is writing this down, by the way. So what are we looking for next? We're looking for the moving averages to face the direction you'd like to take. So now let's say the market, the EMA was above the SMA, okay, and then it crossed over and went down. Now we're looking for sales, right? Okay. I said the first signal is the crossover, right? I'm sorry for that delay. I said the first signal is the crossover, right? And then the second signal is we wait for the moving averages to face the direction we'd like to take. So let's say here we were possibly looking for a sell. The first step was the crossover. We saw the moving averages crossing over to below, it went below the SMA, which means we're only looking for sell opportunities. So I said the second step is the moving averages should be facing the direction you'd like to take. So for instance, as we can see here, the moving averages are not really facing up or down in this area here. They're just facing sideways. So we're not really looking for any opportunity. But here, the moving averages are facing down. This looks like I. But the moving averages are facing down here. So we're looking for a sell opportunity. I hope everyone is understanding this. It's quite easy. So I'll start all over. The first step, we're looking for the crossover. Second step, we're looking for the moving averages to face the direction you'd like to take. I hope everyone is writing this down because already I'm on my second step. I have 2 more steps to go. So I hope everyone is writing this down. After this, I'll make a couple of examples and I hope trades will present themselves so I can take live trades while in this meeting. Okay, I hope everyone is understanding me. So I'll start all over. I said the first step, I have a question here. Let me just quickly read. I'm writing everything. Thanks, Kat. You understand it. Trust me. I said the first step is a crossover. Second step, the moving averages are supposed to face the direction you'd like to take. Yes, Matunga, you still remember. Use a blue pen. You will see magic. You'll remember everything when you use a blue pen as opposed to a black pen. Sorry for those delays, guys. Sorry for those delays, guys. I'm still reading questions this side. I'm trying to answer people. So I said the first step again is the crossover. The second step is the moving averages facing your direction. What is the third step? I said the strategy is based on. I said the strategy is based on swings, which is swing high and the swing low, and it's also based on moving averages. So this is when the swing highs and swing lows come in. So now let's say we're using this as an example, right? And okay, there's a question here. You've already written in black. It's fine. I'll send you the recordings of this video and then you'll rewrite it in blue pen. It will happen. And write and on the side, write this as a heading. Right? I'll be what? I'll be a successful trader. No, write I am a successful trader as a heading. You'll see magic, guys. I'm telling you, you will see magic. Okay, moving on. I said the strategy is based on swings and moving averages. So let's say now we're looking at this example, right? This is a swing low. We mark this. No, actually, let me use an example that already happened. Let's use this as an example. This is a swing high. The market went up and pulled back, leaving this point here. That is what we call a swing high, right? Everyone still remembers. Let me highlight this. So what happens is, I said the first thing we look for is the crossover. The moving averages were still below. The EMA was still below the SMA, which means we were looking for sales. The only time we could look for a buy is when it crosses over, which is what happened here. That's the first signal, right? The second signal is we look for the moving averages to face your direction. Now the EMA is above the SMA. We're obviously looking for a buy, right? So the EMA is above the SMA. We're looking for a buy. And I said the second step is the moving averages should be facing your direction you'd like to take. Someone has their mic on. Let me just quickly see who it is. Kat, please switch off your mic. Diniko, can you please switch off your mic? Thank you. So, crossover, number one. Number two, the moving averages are facing up. The EMA is above the SMA, which means you're only looking for buy opportunities, right? So the moving averages started facing up. That is our second signal. Our third signal is we have to take note of our previous swing. Here we have a swing high. That's what we should be looking for, because we're looking for the market to break the swing high. Okay? I hope everyone is still with me. If you're not with me, just quickly ask a question. Just ask the question, feel free. While this crossover is happening and the moving averages start to face up, you quickly go back and check, where is my next swing high that I'm expecting the market to go above, that I'm expecting the market to break. Here's my swing high, right? The market broke the swing high. Breaking the swing high or the swing low is our third step. You can write that down. Our third step, we're looking for the market to break our previous swing. I'll give you 1 minute to write that down. I missed this trade. I missed it. I can't enter. It's already late. See this. I'll give you a minute to write that. Okay, I'm assuming everyone wrote that down. So I'll go back to my example. Now I can't find my example anymore. Okay. Okay, guys, I lost my example. Let me try and find it. Or find a new one. Oh, here it is. So it gave me a swing high, right? Then pulled back. In future, I'm expecting the market to break the swing high, which is my third step. First step is the crossover. Second step, the moving averages should be facing your direction. Third step, we're looking for the market to break this previous high. Okay? We're looking for the market to break this previous high. As we can see, this candle right here. Let me just mark this area. This candle right here. This candle right here broke the market. It broke the previous high. That is our third step. It's not enough. This will now take me to my fourth step. After the market breaks a previous high or a low, we wait. What are we waiting for? We're waiting for momentum. So what is momentum? We want to see big candles pushing towards our direction. In this case, we wanted to see big candles pushing upward to see if this is not a false breakout. Because the market can break out of the high, then quickly pull back. If you miss the fourth step, it's going to take you out. Because you still have to wait for momentum. You have to see the market pushing towards your direction. See now, in this thing, you also have to use your own creativity. You can see a big candle, you can see a small candle, you can see a medium-sized candle. This is obviously a big candle, extremely big candle. This is a big candle, but really not that big. This is a big candle. You see that? You also use your own creativity. That's something I can't teach you. If you see the market breaking out of the high or low and give you small candles going up, don't take that trade. That's not momentum. You want to see momentum. You want to see the price pushing quickly towards that direction. So in this case, it broke out here, then gave us momentum. It gave us two medium-sized candles going up. After this candle, that's when you would have entered. On this candle, when this candle opens, that's when you would have entered. And 6 candles away from that is your exit. So it's 1, 2, 3, 4, 5, 6. This is your entry. So it's up. This would be a win. Let me just quickly highlight that. So after it gives you momentum, big candles pushing towards your direction, 6 candles away from that, you're out. And I'll explain later why I say 6 candles. Some people know, but I'll explain later to those who don't know why I'm saying 6 candles. Can everyone hear me now? I hope everyone hears me now. Okay. Okay, cool. So I'm going back to my 4 steps. I said the first step, we're looking for a crossover. The market should go cross over. If it was on a sell model, which means the EMA was below the SMA. In order for us to look for buys, the EMA is supposed to go above the SMA. So for the EMA to go above the SMA, we have to see a crossover first, right? Secondly, we have to see moving averages facing the direction we want to take. So the moving averages here are facing up, confirming our second step. Third step, in this specific example, we wanted to see the market breaking this high. It has to go above this high, which is what we saw here. That is our third step. Our fourth step, we wanted to see the market pushing towards. You can go in after 2 candles or 3 candles, depending on the size of the candle. If after the breakout there was one big candle, let me just try and draw here. If after the breakout there was one big candle going like this, you would have taken the trade. Why? This is too much momentum. It's momentum on its own. We can't wait for the next candle after this. We know that the market is already confirming that it's going up. But this candle shouldn't be the breakout candle. Should be the candle after the breakout candle. I hope everyone understands. So, as we can see here, this candle broke out, right? This small green candle broke out. If ever after the small green candle we had one big candle pushing up, we wouldn't have waited for 2 candles. Okay? So it depends on the size of the candle. If we had to get smaller candles, we'd wait for 3 or 4 candles just to confirm if the momentum is enough. Hope everyone understands. I'm moving on. NB. Nota bene, I think that's what it's called. NB. Before you take a trade, take note of your previous high or low. In this case, take note of your previous high. A previous high than this. This is a new high, right? Check the previous high before this. That is where the market will stop. I'll make more examples. You see here, this is our previous high, right? After this high, before this high, this was the high. This was the previous high, right? Above. So before you even take the trade, you have to know where will the market stop. Let me highlight this. Before you even take the trade, you need to know where will the market stop. Because if you don't know where will the market stop, you're not any different from someone who's taking a trade blindfolded. You have to see where will the market stop. This is the high I drew, right? We use this as reference. So if let's say this is my nota bene, right? If let's say the market gave you momentum, right? Let's say after the breakout candle it gave you momentum, and the momentum candle was it was a big candle going up to somewhere around these levels. Would you take that trade? I'm not sure. Can at least 3 people answer me? Would you take that trade? If momentum pushed to somewhere around here, would you have taken that trade? Why? Can someone answer me? One can switch on their mic and tell me why wouldn't you take that trade? Yes, if it's after the breakout. Yes, Tinyiko, if it's after the breakout, momentum should always be after the breakout. Right now, I want someone to tell me why they wouldn't have taken this trade. I don't just want to see a no. I want to know why I'm saying no.
Because it's too close to the other high.
Okay, that is correct. Because it is too close to this high. Remember, the market cannot just stop. It's either stopped by what we call order blocks, what I won't talk about because it's unnecessary. What we call order blocks, support, resistance, swing high or swing low. That is what stops the market. The market can't just stop out of the blue. It has to be stopped by something. So in this case, if it gave you momentum up to these levels, you wouldn't have taken this trade because it's already close to your swing to the previous high. But in this example, I like this example. Why? Because this high was still far. Okay, this high was still far. So if in trades like these, these are the type of trades I would have thrown 100% risk. If this $10 account is like $10 like this, and it gives me a trade like this, and the momentum is somewhere here, and I see that the high is still far, I would have threw in 100% risk here. Why? Because I know that in 6 candles it won't stop. It won't take me out. Can you please switch off your mic, Tim? Thanks. In trades like these, that is where I throw in 100% risk. Why? Because I know that it won't take me out. The high is too far. Let me just go back and see if there's any trade yet. No trade yet. So let's go back to teaching. So guys, I'm going back to my 4 steps. I said the first step is crossover. Second step, moving averages face your direction. Third step, the market should break a high or low. Fourth step, we want to see momentum. We want to see momentum. But momentum is not enough. We want to see where is our previous high or our previous low. Okay. I had network problems, guys. Sorry. It's back now. Is the screen back? Does everyone see the screen? Can everyone hear me? I had connection problems. Okay. Everyone hears me. So I said the first step is the crossover. Second step, moving average is facing our direction. Third step, you want to see the high being broken or low being broken, right? Fourth step, yes, Beck, I'm having connection problems as well. You relate, Kat, it's bad. So, fourth step, we want to see momentum. Momentum after the breakout. Momentum after the breakout. Okay? We want to see momentum after the breakout. Okay, the network is really bad, guys. Please bear with me. So I said we look for the crossover, moving averages face your direction, a breakout out of a previous high, a breakout out of a high, right? And fourth, we look for momentum pushing towards our direction after the breakout. The momentum should always be after the breakout. See now, I actually should make this a 5-step strategy, because after the breakout and momentum, you still have to take note of your previous high or previous low, because that's where the market will stop. Let me go back and make examples so you can see. I really want to take live trades, but I don't see any trades presenting themselves. So I don't want to take a trade, then I lose it. Then you'll say, you'll go to Facebook and post and say, Moses lost the trade. I do lose trades anyway, but win most. Okay. Okay, I'm just finding examples, okay? This is a bad example. No, this is actually, I actually found a perfect example. I think this one is a good example. Okay, I think I found a good example. You see here, this is our high, right? It's our high. Let's say now the market is trading below this high. First thing we look for, crossover. Secondly, moving averages facing our direction. Thirdly, breakout, right? Fourth, momentum. You see how big this momentum is? Let's take note of our previous high. This is our previous high. You see where this is? This trade is not safe. Sometimes you can win trades like these, but most of the time they kick you out. So trades like these, the momentum is already too close to our previous high. So you're not taking this trade. If ever momentum here was something like this, if ever momentum was something like this, we would have taken that trade because we're still far from our previous high. It's quite simple to understand. Let me find another example. And guys, there are times where you stay away from Bitcoin. I'll show you when you stay away from Bitcoin. You don't trade. I know it's open 24 hours, but you don't trade it 24 hours. There are times where you stay away. I'll show you when. Okay. I'm glad you're enjoying the session. I'm enjoying the session too. Okay. Cool. Here's an example, right? This is our high we anticipate. This is our low we're anticipating. I went back and marked my the next low the next low where we expecting the market to stop, right? That's where we're expecting the market to stop. So first signal, crossover. The EMA is now below the SMA. Secondly, what do we look for? Moving averages to face down. We're anticipating a sell, right? We're looking for the moving averages to face down. Second signal, check. Thirdly, we're looking for the market to break this low, going below this low, which is what we call a breakout. That's our third step. But we don't enter yet. Why? Because there's what we call false breakout. So the market can just quickly reverse from here and take you out. So we need to see momentum. The next candle after the breakout was a small candle. I'm still not convinced. The next candle is a small candle, but it's also going down. It's red. That's when I enter. Why am I entering after two candles? Because it's not enough momentum. But if I had to get one big candle going down, I was going to enter. Also taking note of my previous high. Of my previous low, I meant to say. So 6 candles away from this, you would have won the trade, which is 1, 2, 3, 4, 5, 6. Why do I keep saying 6 candles away? You know why? Firstly, guys, before we go anywhere, your time interval should always be on 10 seconds. Okay? the time interval should always be on 10 seconds, right? Which means after 10 seconds, there's a new candle forming. Time interval should always be on 10 seconds. And your platform is still on by now. Your platform should always be on turbo, okay? Always on turbo, never on binary. Why is it always on turbo? Because turbo has trades that last from 1 minute up to 5 minutes. Binary is 15 minutes up to, I don't know when, but it starts from 15 minutes minimum. So you should always be on turbo. And here, 10 seconds interval. And then here, when you execute a trade, when you see a buy or sell, you don't change this time frame, you just execute a trade. What will this do? It will make your trade last for a minute or less. Most of the time, 1 minute. So how many 10 seconds do we have in 1 minute? 6 10 seconds. So that's why all the time I'm always saying 6 candles away, you want your trade. 6 candles away, you want your trade. Okay? So guys, so far, is everyone understanding? That's the whole strategy, by the way. So I want to see questions, guys. Ask me something. Ask me something. Anything. Ask me, Moses, what's your other name? Anything. Just kidding. Okay. You missed the first 10 minutes. Matunga. Okay. First question says, Diniko, you're saying you missed the first 10 minutes. Can you please just elaborate on that? What do you mean you missed the first 10 minutes? What 10 minutes? I don't understand. What 10 minutes? First question. What did you mean? I missed it. Oh, you mean you missed the first 10 minutes of the session? Okay, so if you missed the first 10 minutes, don't worry. I was just saying the same thing. Because this is basically the strategy. It's just 4 steps. I was just saying the same thing. So if you missed the 10 minutes, it's fine. It's okay. Plus, we recorded the meeting, so you can still go back and refer. Second question, when to stay away from Bitcoin? I'll come back to that. Matunga, no sound. Okay, Matunga, I was saying the same things throughout the session. Okay, connection problems. Since I had connection problems, my questions are removed. So I think the other question was when to stay away from Bitcoin, and the other question was what was the other question? Sorry, my chat are deleted. I lost connection. When is the best time to trade Bitcoin? Okay, I'll answer that one when I'm closing. Ish, I think I missed the trade. I'll answer the question when I close the session. Okay. Guys, we missed the trade. We missed a trade. God, we missed a trade. I was gonna go all in this trade. By the way, I was gonna go in with $10. Okay. Renee, let me just try and understand it. If you go through the graph now, where will you say it's a swing low or where I must enter? Okay, Renee. I'm not sure if I fully understand the question. Okay, but I'll just use the example we have now. Right now, we just lost the trade. We didn't enter in time. So this is what happens. You see here, we have a swing high, right? We have a swing high. I said the first thing you look for is the crossover. Second thing, moving averages should be facing your direction. Thirdly, we're looking for a breakout of the high. So this is our high here. The market went up and pulled back. It formed a swing high. Okay. So here the market with this big green candle going up, the high was broken. The high was being broken here. So before you can even take this trade, you first have to take note, where is my next high? Okay. Here is our high, right? I hope you see this high. This is our next high. From here, this was our next high, okay? Now, first step, crossover. Second step, moving averages facing your direction, which is upwards because we're anticipating a buy. Third step, we're looking for momentum. Now check this out. You see the candle that broke out. Even if the breakout was a bit small, it was already momentum on its own, right? So what happened next? We found another green big candle going up. Next candle was also green. So in this second candle, you would have entered. Why? Because this first candle after the breakout was not small, it was a big candle. So you would have entered on this second candle right here. 6 candles away, you would have been in profit. Also taking note of your previous high, which is here. That is why the market came and reacted to close to this high here. That is why the market came and reacted here. The market cannot stop unless it's stopped by an order block, swing high, swing low, support or resistance. So this is the reason why the market stopped. First signal, crossover, moving averages facing your direction, breakout, momentum, could be 3 candles, could be 2 candles, could be 1 big candle. You'll use your creativity, you'll see when you see momentum. After the second candle, after the breakout, you would have entered in 6 candles away. 1, 2, 3, 4, 5, 6. You would have won the trade. Done. I missed it. I was going to take this trade, I promise. I missed it. I hope we find another one. I'm really in the mood to trade. So with that being said, is there anything you don't understand? Okay, before you even ask questions, let me just explain to those who asked, when do you stay away from Bitcoin? So guys, okay, let me just view these questions just a moment. Okay, Mzu, I was still reading questions here on WhatsApp. So everyone seems to be asking me the same question. When do you stay away from Bitcoin? These two. Okay. See, guys, this strategy works best. There's a question here. It's back. Yeah, it's back. So, guys, this strategy works best when the market is trending. Okay, so how do you see if the market is trending? You see here on time interval, you need to see the bigger picture. You need to see a bigger time frame. You can go to 1 hour, 2 hours, or 4 hours. I'll just use 4 hours, okay? So look for when the market is having big moves. You see when the market is doing something like this. These are big moves. Imagine if this is 4, 8, 12, 16, 20, 24, 24, 4 hours. No, 1, 2, 3, 4, 6, 4 hours. Can you time that? 24, okay. 24 hours worth of trending markets. I hope I explained that proper. So this is 24 hours of a market trending. Imagine how many 10 seconds are there in 24 hours. That's a day. Imagine how many 10 seconds are there in 24 hours. That's a full day. See, when the market is trending like this, that is when you see your opportunity. But when the market is doing, let me just mark this area. This one up here. When the market is doing something like this, no man. Yeah, when the market is doing something like this, stay away. Stay away. Why do you want to stay away? Because there will be highs. There will be a lot of highs close to each other. I hope you understand that. There will be a lot of highs close to each other. So when the market gives you momentum, what will happen most of the time? You will find that momentum is already leading to the previous high or the previous low. Let me repeat. When there's a lot of highs and lows in the market, when price gives you momentum after the breakout, you will find that most of the time, momentum is already close to your previous high or your previous low. So when the market has moves like these, when the market has moves like these, okay, it's hard to find previous highs and previous lows close to each other. So in movement, in times like these, that's when you multiply accounts. This is where you multiply accounts. You skyrocket accounts when there's times like these. Don't be afraid to throw in 90% risk. When the movements of the market are like this, in the 4-hour time frame or the 1-hour time frame, don't be afraid to trade. That is when you'll make money. But when the market is giving you something like this, the market is basically ranging. And don't forget, I'm saying when the market gives you something like this in the higher time frame, don't look at 10 seconds and you don't believe me, Katler. You know what? I hope the market shoots up tomorrow. So what happens is, if I'll see big moves tomorrow, even if it's at 2 p.m. or whatever time it is, if I see big moves, I'll just create a session same time, and I'll show you what I mean when I say you can throw in 90%. I sometimes throw in 100% risk and win the trade. I'll show you what I mean. And I think people would love a live session here. So when the market is giving big moves, I'll just create another sessions for us to do live trades. Just trade together. No, yeah. So my point is, when the market is giving you moves like these, that is when most high probability trades are formed. When you see basically right now, there's not a lot of opportunities. Why? The market is ranging. Look at this. The market is on a consolidation. It's on an accumulation phase. When the market is ranging like this, when it decides to break out, it will be a powerful move. Let me make another example. See here. Currently price right now is doing something like this. And you see what usually happens after it accumulates. Moves like these happen. So right now we're just waiting for that move right now. It could happen any second. It could happen at 3 a.m. It could happen at 2 a.m. Whatever time it could happen. I think the sound is breaking. Should be back right by now. So when the market is ranging, consolidating, accumulating, you stay away. So to all those who ask me questions about when to trade and when to stay out, do you understand are you answered? Talk now or forever hold your peace. Questions, guys. Questions, guys. Are you answered? Guys, we have 11 participants in this meeting. I want to know if all 11 participants are answered before I continue. Five people answered. We need 6 more. Kenita, I'll answer a question about the news. I just want to see if all 11 members understand. 5 answered. We're waiting for 6 more. 5 more. 5 more. Okay, I'll just continue. Okay, Kenita, can the news affect binary or Bitcoin or whatever? No, shall answer your question. Okay, seems as if everyone understands. So, can the news affect? So, news can affect binary, okay? But to be honest with you, I'll be quite honest with you. I'll be very, very honest with you. I usually check my news on Forex Factory, and I've never seen Bitcoin. I only see currency pairs, as in euro, whatever, and whatever. So I doubt the news really affect. I doubt the news affect the Bitcoin. I think that's why sometimes we get moves during the weekend. Sometimes I don't think it's affected by the news. I'm not sure, but I don't think it's affected because in the Forex Factory, actually, let me check this. Let me just quickly go check this, just to be certain. Okay, Zoo, you lost about momentum. Preview.
Wait on out. The really is.